Hey guys, so this video is centered on the news item that got published today, the disclosure that the BSP, the central bank, cut interest rates by more than 50 basis points. So, how does this connect to the stock market? Is this good? Is this bad? I'll talk more about that in the end, but I'll try to give you context as well on why did they do it, what's the cause of this, and why do the central bank move interest rates up and down, and how does it impact the economy as a whole? And later on, we're going to talk about what's the direct impact of this in the stock market as well. So, if you guys are new to this, my name is Marvin Gerb. I'm a stock market trader and investor, and I make daily videos, especially during lockdown, to help give you the right context on how you can trade the markets with confidence. So, we're very, very close to 100,000 subscribers. I think it's just a few, just less than 50, I think, before we get to 100,000. Thank you so much to everyone who has been part of this channel. And if you want to know more about investing and trading, super appreciated if you could subscribe and smash that bell so you get updated every time I come up with new content about investing. And for those who want to learn from infographics, I have another channel. It's called Stock Investing Made Easy, where we have cartoons, doodlies, infographics, all with one goal to teach you the basics about investing. So if you're subscribed to this, super appreciate it if you could hop over to my second channel and subscribe to that as well. Anyways, main context of the video is cutting down interest rates. Now, I mentioned this on the top of the video that the central bank cut rates by 50 basis points. That meant that the key rates that we have dropped to 2.75%. Please remember that in terms of significance, this is where all of the other rates are also pegged, meaning, but meaning when the government drops interest rates, it means that other conservative investments will also have to go down. It also means that other investments like bonds, it also means that other corporate bonds as well, their rates will also go down. So that's the impact of that. And if they also increase it, that also means that you put your money in time deposits, or uh, you put your money in, I don't know, other fixed investments, the rates will also go up. So it goes, everything goes hand in hand in all of this as well. But also, before I continue, lowering rates also means that they need to do something to protect the economy, meaning there's some level of stimulus that they're trying to do to help protect it of sorts. Anyways, so as what I've mentioned, they dropped the central bank cut rates to 50 basis points. It dropped to 2.75. The thing about that though was this. Last March 2020, they already dropped it to 3 they dropped it already 50 basis points from 3.75 to 3.25. So please remember, March was just a month ago, just a few weeks ago. And I think they did it March 20, if I remember it properly. But anyways, they did it March 20. They dropped it from 3.75 to 3.5. That was something that was scheduled. That was something that everyone was anticipating as part of the BSP's tools to help during the lockdown to provide the stimulus. Then today, they dropped it to 2.75. Here's the chart of our rates now over the past year. As you can see, it remained flat up from October 2019. Then suddenly at the start of the year, boom, it suddenly started to go down. If you've seen my other videos where I talked about rates not just in the Philippines but in other countries as well, other countries around the world also have been dropping rates as their way also to stimulate their economy. And if you remember one of the videos that I posted, the US Fed even dropped rates so close to zero. And that was part of their plan also during the 2008 recession, where they dropped it close to zero and they did quantitative easing and they printed more money. So, again, the technique of the US: drop rates nearly close to zero, print a lot of money, then buy back a lot of bonds as well. So what we're doing is not something new. What we're doing is something that is employed in other countries as well. The thing about that is this: if you see the chart very well, just for 2020 alone, they've already dropped 125 basis points just for 2020. So this is 125 basis points. If you put it into context, including last year, we were at 4.75 already. So interest rates have massively dropped, more than 200 basis points uh, from May last year. So it's not even a year, but we're already down. We're already down more than 200 basis points. Again, this is the way for the BSP to help the economy, especially in what we're going through right now. I'm going to talk more about that in a bit. But what's alarming, not naman alarming, but what people did not factor in was this uh, rate cut is something that was unscheduled. What do I mean about that? The rate cut that I mentioned from 3.75 to 3.25 was something that they did last March. And they were supposed to revisit it and make another move for May 2020. And that was the that's a deadline, or that's a time frame where people were expecting the BSP to do another rate cut. Now, here's the thing. My analysis in this is the reason why they did it earlier was they're really, really, really thinking that the economy is not as good as where they would have wanted it to be. That this is an ad hoc measure to somehow cut it off at the very from where we are right now and provide a stimulus to make the economy at least somehow have some aid. Please remember, one of the mandates of BSP is to help protect and make the economy, I guess, smoother and better as well. And even analysts from different houses, all we're expecting further cuts, but they weren't expecting a 50 basis point cut, and they were expecting it to be this soon. Again, as what I mentioned earlier, this shows signs that the economy is not as stable as what everyone thinks it is, that the economy is struggling. There again, I made videos with some economists projecting that at the second half of the year, the economy will get better. But part of that also, Q2 2020, the Philippines will be in a recession. Uh, but here's the thing, we still don't know it. We still don't know that really in the second half of the year if things will get better. Because at the end of the day, made several videos on this. Uh, I think this will predicate everything. We still don't have a cure, and people infected more than the 2 million mark, they just keep on increasing. Up until that changes, this will still be the new normal for us. When I say new normal, unpredictability, because of the lockdown, we don't know how long the lockdown will end. As long as a lot of those retail establishments are closed, and by the way, it's not just retail establishments that are closed as of the day. This full Luzon lockdown. It's not just about retail establishments. Everything is in every majority of the economy is closed. You only have essential products like vegetables, fruits, essentially food, and anything that will help us uh, work and live normally. So utilities, telecom, etc. But everything else right now is closed. So what does that mean, and what does that have to do with all of this? I really believe that until we find a cure, until we find something that will cause people to go back to normal in terms of how they live their lives, uh, we still don't know how bad it could get. We still don't know if this will turn around even this year. We still don't know that if in the second half of the year things will get better, or if the recession might slide. That's why I've been saying this over and over. If you have cash and then you need the money, store it. Don't spend as much yet. If you have extra cash for investing, that's the only thing that you can put in. But other than that, if you have cash for to store for a year, you need to have that cash position right now to protect you and to hedge you, especially in times like this where there's a lot of uncertainty going on. So that being said as well, since we don't know how long the lockdown will end, I really believe this. The longer the lockdown is, the worse the economy will get. But here's the thing also, and here's I think the dilemma that everyone's trying to put in. Uh, the coronavirus is a threat to humanity. It's a threat to people's health. if we open it too soon, we might have another lockdown later, and it might be even deadlier to the economy. But in the same time, we're harming more people. So I think one of the things that we will have to see is how the mass testing will go, because how the mass testing will go as well will somehow give an indication that how how fully controlled this lockdown really is. Did the lockdown really help? Did it actually curb the growth of the coronavirus here in the Philippines? Because if there's no tangible results yet, we're not too sure if after April 30 things will still be open, or it will already be open, or it will be fully open. But a partial opening of the economy, a partial opening of certain industries still doesn't mean that the economy will be gushing out and pushing fast already. So there, all of this is for me to say that basically the economy is not in a very, very good condition as what everyone projected it to be, as what everyone wanted it to be. We're very, very far. And if you remember the previous videos that I mentioned, and if you haven't watched it yet, I mentioned that the GDP for the second quarter might be negative, or the GDP might be close to zero. So again, that's the big impact of all of this. Next date for you to watch out for is the BSP meeting this May 21, 2020, on what they'll do again in terms of the rates as well. So just to reiterate further, why did they cut the key rates? Again, as what I've been mentioning over and over and over, it's a way for the BSP to somehow stimulate the economy. Why? Think about this very, very well. If they lower the interest rates, that means that people who would borrow money, I'm an entrepreneur, I need to keep my business afloat, the rate of interest that I need to pay for won't be as high. So, any form of debt, any form of borrowing, because the rates are lower, it allows other people to stay afloat. Ganun din in any type of debt, especially new debt from cars to houses to personal loans to business loans, since everything is pegged on this, the lower these rates go, the easier it will be for people who would want to borrow as well, and the lesser the burden it will be for people who are borrowing. So you have to look at it from that perspective. And I just mentioned that from a borrower's perspective, but you also have to look at it also from a saver's perspective. Why? If rates are low and you are a saver, every time you put money into that investment or into that savings account, the rates that you will get, the interest rates that you will have, will be massively lower as well. So, what does that mean? So, for people who are savers, for people who are putting their money into fixed assets, and because rates are lower, they won't be contented to what they're earning, they won't be contented to what they're getting. So, they will be forced to take on more risk. They will be forced to remove it from this fixed savings and put it into somewhere where they could possibly get higher earnings, or in essence, taking it out to put it into the economy so it circulates even more, which is what everyone wants. We want more money moving around, because what I've been saying over and over and over, the economy is just made up of transactions. One man's spending is another man's earning. So when these people take it out, they'll try to look for, oh, there's an opportunity here, I might start the business instead because I'm not really making money anymore, or I'll just buy real estate because I'll get a better yield already right now. So things like that, it could be different opportunities for them to put their money, could be different asset classes. But what I'm trying to say is, because rates are so low, because no one will make money off of it, it forces savers to take their money out and put it and pump it into the economy. So again, this helps borrowers in bad times because rates are lower. But in essence also, this forces savers to take out their money, put on more risk, but put their money in circulation in the economy. So that's what I've mentioned. Also, again, this is part of the BSPs or any central bank. These are called fiscal tools. So these are their tools that they can use on how they can push, how they can stimulate, and how they can make the economy better. Another thing, this is not, and it's not actually part anymore of the disclosure, but I just wanted to share it also. One of the fiscal tools that they have is they can tweak the RRR, or the reserve requirement ratio. It's the ratio percentage of cash that the banks need to hold is as a reserve. Please remember, every time you put money in the bank is not allowed to, for example, you put 100 pesos, they cannot loan out the 100 pesos that you gave them to other people. There has to be a reserve there that should protect your cash, that they have that in cash, so that when people withdraw, there's an adequate level of cash there. It talks about the liquidity of the bank. It talks about how firm the bank is. And if I remember it properly, just more than a year ago or 2 years ago, the reserve requirement ratio was around 20%. That made us one of the most conservative banking nations in our region. But as of the last disclosure, uh, our reserve requirement ratio is at 12% already, meaning they've dropped it already massively. By the way, this 12% has already experienced a 200-point drop, meaning this was around 14% already, dropped to 12% in response to protect the economy from the effects of the coronavirus. So essentially, what other things that they can do still, again, they could at 2.75%, there's still room for them to drop it. It's very, very far from the 0% that other countries are employing, especially the US. But aside from them dropping interest rates, another tool that they can use is they can continually drop this RRR from 12% to a lower number. And here's the thing, when they drop the RRR, it releases more cash that the banks could loan out. Please remember this. I think I said this in another video, that when banks uh, have lesser money that they can loan out, they become selective. Meaning, when they're selective, it will be harder for other people to get loans. But when there's a lot of cash available, there's a lot of cash that they can use, there's a lot of cash that they can put out into the economy or lend to a lot of people, then it wouldn't be as hard for a lot of borrowers also to borrow. Access to credit will still be easier. Again, all of these moves that's being done is to just inject more money into the system, so that more money is moving, people don't get scared, people will act that it's normal, banks will act that it's normal. Again, if they have a lesser level of cash, it causes them to be more stingy in lending money to people. And again, this allows them to at least somehow have a level of liquidity to lend more money and make money move around even more. Okay, I hope you guys are learning. I hope this is something that's helping you. We're at the 17-minute mark. I hope you're still here. Comment below if you do. And if you do and you're learning from this video, please comment, I'm learning. Or hit the like button. It really means a lot in terms of how the YouTube algorithm will show this video to more Filipinos as well. I just wanted to end with this. Other applications of the rate cuts, it's basically this. Uh, if you have been investing, let me give you an example. I think 2018. Yeah, I think it's 2018. 2018, inflation in the country hit 7 plus percent. So one of the responses of the government or the PSP to combat it is uh, they can also tweak the interest rates. Pero baliktad naman. The reason why I'm saying this also was at the time when when inflation was so high in 2018. I don't know if you remember this. One of the triggers of it, because oil was so high, and they just also the new tax law just got implemented that year. That's why inflation went up to 7 plus percent at that period. But anyways, one of their tools for them to protect the economy also was they had to raise interest rates. That's why interest rates during that time, if you remember the chart that I showed you, sayang nga, I wasn't able to show you a full chart. If you look at it, it came from even at a higher percentage point, a higher percentage base. Why? Because at that time they were trying to combat high inflation in 2018, and it suddenly, because inflation started to go down as well, they started also easing the interest rates of sorts. And please remember this: the only time that they could also lower interest rates to protect the economy, like what they're doing now, is inflation is low. And one of the good things that's happening right, not even good things, but one of the silver linings in all of this is that oil prices are low. Hence, it helps somehow eases inflation, that inflation is not so high naman. That's why they could do this policy for them to drop interest rates. So again, I just wanted to mention that it's a means for them also to control inflation. That in times where inflation rates are so high, what the BSP could do is just raise rates to help ease inflation, because when they raise rates, they do the opposite. They take out money from circulation because people will want to put their money in fixed assets, fixed uh, assets that will give them a fixed rate of return. Hence, they put their money in the banks. Since they put their money in the banks, it's not anymore circulating. Hence, they lessen inflation. There. I hope you guys got a lot. If you guys got a lot from this, again, super appreciated. If you could press a thumbs up, press the like button. If you guys have any questions on top of this, just put the hashtag questions and then your question, and I'll try to make a video on top of that as well. After this, we're doing stocks by request. So if you have any stocks that you guys want me to also analyze, put them in the comment section below. Put hashtag stocks by request, and I'll make a video on top of that. If you have any questions and you want to be part of the next vlog to ask your questions, just put them there. Just comment hashtag I want to be part of the vlog, and we'll try to see how we can make you part of the vlog. If you guys got a lot from this, super appreciate it. If you could subscribe, we're very, very, very close to 100,000 subscribers already. If you want to extend your learning and you want to learn more, in the link below, I have 5 books. All of them, 2 links there. You can order one via Shopee, or you could order the second one via the online store. But because of the lockdown, we can only grab it to all of you. It can be sent via Grab or Lala Move. So you can click the link if you guys want to order. And 2 courses about the stock market. One is with Chinkee Tan. It's called Stock Market for Everyone. It's a Tagalog stock market course. And followed by this, Make Money, Grow Money. It's with Sean Si. It's a entrepreneurship slash stock market course as well, where the goal is to teach you guys the basics of how you can invest in the stock market. So all of them are in the description below. Just have to click the link. So I guess that's it for now. I hope you guys got a lot from this. I hope this is something that gave you enough insights for you to be able to trade, for you to be able to win, and for you to be able to use whatever tools that you have to make money in the market. So this is Marvin Germo. I hope. Oh, I forgot. I was about to end it already. I wanted to say something. I said that at the end of all of this, I wanted to say how this impacted the markets. It could go both ways. No, one way for the people to perceive it is, number one, uh, it will look negative in a way that the fact that the BSP is dropping rates, it means that they're already forecasting that the economy is bad. Or for a more optimistic note, also, they could the market could receive it as the BSP is taking precautionary measure to somehow protect the economy, uh, to somehow prevent it from getting any worse. So one is an optimistic view, one is a pessimistic view. But there's one thing that's very, very common in all of them. The reason why they're doing this is because the BSP thinks the economy is not as stable as what we think it is, that it needs some intervention, it needs some stimulus. So that's the reason why they're cutting interest rates. So comment below if you think this is something that's optimistic. Comment below if this is something that's pessimistic. So I guess that's it. This is my real ending na talaga. I hope that you guys got a lot from it. Comedy no pa ending na, but I didn't end it pa pala. But there. So if you guys got a lot from this is Marvin Germo, and I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.